So today's Tuesday the 12th of March, and I've just done a quick cash secured put trade. I've just pulled down a quick $125 doing it, and I'm going to show you exactly what I did. So the trade was on CPU, which is Computershare Limited. Basically, I was just looking for some shares that have kind of fallen in price today. The market took a little bit of a hammering yesterday, but it's up again today. But I wanted to find some shares that are kind of still struggling a little bit today. And I found that CPU had dropped about another 1.5% today. So I thought, is the falling price going to stabilize? And if so, can I sell some put options, grab some premium, or potentially buy a stock that's cheap today with the potential of coming back again? So CPU is trading at $25.06, which is down 1.5% from yesterday, 38-cent drop from yesterday. So I had a quick look at the chart. Here it is here, $25. I'm thinking, where is support on this stock? And I start looking around these prices here, around about $24, $24.50 or so. Would I like to own CPU at $24.50? Yeah, why not? It's not a bad looking stock on the whole. And I do see some support around the $24.50 mark or so. So I think, why don't I sell some $24.50 put options? Which means, of course, I'm giving somebody the right to sell their CPU shares to me for $24.50. It's a right, it's not an obligation on their part. It's an obligation on my part, meaning if they do want to sell them and I've sold puts, then yes, I do have to buy them from them for $24.50, meaning if the stock falls down to $23 or something, I'm obligated to pay $24.50 because that's what I'm about to say here. So this strategy, selling cash secured puts, or the option wheel strategy, is by no means risk-free, because I am risking potentially, if I sell, let's say 4 contracts, that's $24, $24.50, call it $25 times 400 is close to $10,000. So I'm committing to buy $10,000 worth of this stock. Now, if the stock obviously plummets down to zero, then I'm risking 10 grand essentially. So yeah, there are risks, but it's no different from the guy that goes and buys stock today at $25. So rather than jumping in the queue and saying, oh yeah, I'll buy them for $24.50, which many people do, they jump into the course of sales queue and say, I want to buy 400 of these shares for $24.50. They don't get paid for it, they just jump in the queue. Well, that's essentially what I'm doing, except I'm being paid for it, because rather than just jumping in the queue, I'm selling put option premium, cash secured. So I look at the options chain. Today is the 12th of March. So I'm looking at options that expire 21st of March. Probably not enough time to warrant the low amount of money that I'm going to get. So I might jump down into next month. So I look at the 18th of April, which is about 4 weeks away. And here's the $24.50 put options. And they have a bid and ask of 36.5 cents and 44 cents. Last traded at 28.5 cents, which is logical because yesterday the price was up higher than it is today. It's fallen. So of course you're going to get less if you're offering a low cost $24.50 put. Is less attractive yesterday than what it is today. As the price is falling, this price is becoming more and more attractive. So 44 cents, 36.5 cents. So I've jumped in and put in an offer of 40 cents, somewhere in the middle between the 36 and the 43.5, so that I can jump ahead of this guy at 36 cents and this guy at 43.5 cents. So I've said I'm going to sell to open 4 contracts which expire on the 18th of the 4th, 18th of April, with a $24.50 strike price, and I want 40 cents per contract. So 100 is the contract size, so it's 400. So 40 cents times 400, of course, is 160. 4 fours are 16. 160, less brokerage and ETO contract fee. I'm going to end up with $124.47.8. So call it $125. So I hit proceed and I send the order to the market. And here it is here. My order was submitted. I get an email confirmation to tell me that the order's gone into the market. Hasn't been accepted yet, but it's gone to market. I then get a notification at 11:10 that my order was successful, that they got the 40 cents that I asked for, which means I got the $160. less brokerage. There's my $124.48. That's now been credited to my account because obviously selling options is a credit transaction. I'm selling something, so obviously I want to be paid for it. So I've collected $125. And if I jump into my actual executed orders, I can see that it's an executed order. It's not an outstanding order. And that's gone through today, 12th of the 3rd, 24. They got 40 cents times 4, $160 less the costs, brokerage and that. And if I have a look at my open positions, here's the CPU one sitting here now with the rest of my open positions. So quick video there. Hope it makes sense. Again, I jumped into the market, had a quick look at a falling stock, which I felt was probably going to have some kind of support. Whether it does or not, I don't know. I'll know tomorrow. But the bottom line is, it's a stock that I want to buy. I want to own this stock. I'm not going to sell put options, cash secured put options over stocks that I don't potentially feel good about owning, because I could end up owning them. And if I'm not happy to do that, well, then I'm not going to sell the put options. So CPU's a solid company, has a market capitalization of $15 billion. It's been paying pretty solid and growing dividends every year of about 3% or so. So the bottom line is, at $24.50, I'd be happy to own this stock. If I got stuck with it and I had to hold it for weeks, months, or potentially years, so be it. I'm going to collect dividends. Part of the option wheel strategy, of course, is once I've sold put options, if I'm exercised, I then own the stock. I then write call options over it, which I'll show you in other videos. But the whole wheel strategy is selling put options, getting exercised, buying the stock, and then selling call premium month in, month out, month in, month out. Well, that's the theory. Bottom line is, I see support around $24.50 or so. I'm happy to buy it at these levels, and I'll wait and see what happens. If I don't end up being exercised, so be it. I've just pocketed $125 for selling the put premium today. Hope that makes sense. Like and subscribe if you've found something useful from this video. Let me know in the comments below if you don't understand and you need clarification on something else, or anything potentially that you'd like me to discuss about these option trading strategies that I'm implementing. Thanks for watching.